Good afternoon and welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin Mota. Well, Yatin, what a great day for markets once again. Bulls have reigned throughout the day. Both the benchmarks have gained over 2% each, and there was broad-based buying across all the sectors. Even Nifty FMCG, which saw mild profit booking during the intraday, that settled in the green with about 0.3% gains. For the benchmark, Sensex was up over 1500 points and Nifty was above that 23,300 levels. Fear gauge, India VIX also saw a sharp cool off, which was down over 20%, and we saw rate sensitive sectors doing quite well today. So the likes of Nifty Realty, Bank Nifty indices and even auto indices, all of them the leaders of the day. Yatin, so overall a very good reprieve given that we've had 90-day pause in tariffs also, and there was some exemption on computers and smartphone tariffs also. So a good day for markets.
Good day for the markets and especially for the Indian economy, because clearly we have a preference for Indian trade agreements with the US. We had the official White House spokesperson also talking that countries like India, the EU as well as Canada, Mexico will get a chance to negotiate the tariffs first. But talking about the markets, almost 10:1 where the advanced decline ratio stood at. Midcap and small cap indices also rallied nearly 3% in trade. Real estate, auto, metals, all the rate sensitive stocks were up in trade today. So clearly the tariff portion is obviously news flow, but back home we have the interest rates which are also falling, and banks like SBI also initiated rate cuts by nearly 25 basis points, which clearly cheered all of the rate sensitive sectors.
That's right. Some of the top gainers on the Nifty 50 also included some of the financial names. If you look at the list, IndusInd Bank with about 6.7% gains, Shriram Finance with about 5.2% gains. Both of them have gained for the second consecutive day. Tata Motors with about 4.5% gains. This comes after Trump has indicated that he might hint at an auto tariff pause and says that he might be cooperating and going to talk with the auto companies to understand what their next move is going to be. L&T with about 4.5% gains, Adani Enterprises with about 4% gains, and Axis Bank also doing well with about 4.4% gains. On the other hand, if you look at the top losers on the Nifty 50, only two losers at this point of time, ITC and HUL. Given that we saw a good run up in the last week, we are seeing a bit of a mild profit booking here, and so ITC and HUL among the top losers on the Nifty 50. But yes, mid caps and small caps, both of them participated equally well in the broader breadth of the markets. Yatin, why don't you take us to the top gainers and movers?
Yeah, looking at the top gainer losers in the broader markets, we have stocks like Sai Life Sciences, which hit a record level, 16% higher for that pharma company. Apart from that, DB Realty, Data Patterns, Intellect, all of these beaten down names clearly bouncing back in trade. However, stocks like Atul Limited, Campus, Anand Rathi, post the numbers, have seen some bit of profit taking. But clearly stocks like Shree Cement, Chambal Fertilizers, Bajaj Finance, Bharti Airtel continue to hit that 52-week high level. So good moves in stock specific names that we have seen for the trade today.
All right, let's talk about the one power lifter stock of the day. That was your HDFC Bank. Like Yatin was talking about how all of the banks have been adjusting their deposit rates also. HDFC Bank was also one of the top Nifty gainer after it cuts its deposit rates by 25 basis points along with several other banks. With this, the bank's savings account interest rate has gone down to 2.75%, and even the fixed deposit rates have also come down slowly too. Another reduction in this deposit rates comes after the RBI has cut repo rate by another 25 basis points, which we saw last week. So when the RBI rate cuts the rate, it's expected that banks will adjust their own rates in reciprocal too. And these reduced interest rates will help the lender lower its cost of funds, which ultimately contribute to margin improvement, especially as interest rates in general are softening. Yeah, then majority of the banks, like you were mentioning, have also adjusted their rates after RBI's rate cut. SBI, Bank of India, quite a positive for the entire sector, given we had issues with credit offtake in the system.
Yes, and the important point mentioned by Goldman Sachs is that the kind of deposit rate cut which has been seen after a period of 5 years, which surely ease the pressure of the net interest margins for private banks, especially HDFC Bank. And also, this initiates the confidence that even if rates are lower from here, banks would continue to attract deposits, given the fact that we have the tariff war volatile stock markets. So the second choice of the Indian households would be clearly fixed deposits, and hence we saw a bold decision by not only HDFC Bank but Axis Bank cutting that deposit rate by nearly 25 basis points.
That's right. Now, in a bull market like this, auto stocks were also one of the lead performers after US President Donald Trump hinted at helping auto companies, where the markets have taken a hint of his U-turn towards 25% tariffs which have been imposed on auto and auto parts. Now, we saw the shares of Tata Motors, which was one of the top Nifty gainers with about 4% gains, while those of Samvardhana Motherson and Sona BLW were also high on the higher end, up over 6% too. Now, after what happened yesterday, after Trump stated that he wants to help some of the car companies and that they need little bit more time to move their production to the US, the reaction was seen across all the global markets too. Even for the US car companies like that of General Motors, Ford, those shares went up by 6%, and even Asian automaker cars like for instance your Toyota, Kia and Honda, they also surged in the morning too. Now, given that Mexico does contribute around 4% of Samvardhana Motherson's revenue, while that of 2% for Sona BLW, the rally was quite imminent that, this is some kind of reprieve that is coming in the minds of investors too. Yatin, JLR, that did pause shipments to the US for this month, but this back and forth tariffs doesn't really rule out stability in terms of policies that most corporates want for a sustainable growth.
True, but this will go on for the next 90 days, I believe, Lovisha. And if you look at autos, the most sensitive sectors, especially when you import a lot of cars from Canada and Mexico, you want to maintain trade relations with your neighbors. China is a separate issue wherein we have seen 125% kind of a tariff, which really makes a lot of things unviable for Chinese exports to the US. But when it comes to auto tariffs, clearly they are targeted more towards Mexico as well as Canada, and any kind of relaxation in there really augurs well for Indian auto makers as well as auto ancillaries, especially the likes of Bharat Forge, Samvardhana Motherson as well as Sona BLW, which have a very large exposure. So clearly auto stocks and auto ancillary stocks, the likes of Tata Motors also will remain in focus. But moving Lovisha from autos towards a lot of other names which were buzzing in trade, let's talk about Indigo. Because we have a regime wherein the crude oil demand is expected to slow according to OPEC. They're expecting a 10% decline versus the earlier estimates in terms of the crude oil prices as well as demand. Now, if you look at crude oil, that has been trading consistently below that $70 per barrel mark, which augurs well for aviation companies like Indigo. Today, Motilal Oswal has upgraded the stock of Indigo from neutral to buy. The new target price has been increased by 30% to a level of 6550. Now, Motilal Oswal believes that the kind of upswing that we are looking at for Indian aviation, the growth in passengers, that is quite strong. Also, if you look at the strategic initiatives of Indigo, be it the loyalty program, be it cutting their costs, something that would benefit margins moving forward according to Motilal Oswal. And also, if you look at the multiple factors which have led to company maintaining the profitability, will be a key to earnings growth in the coming financial years, because clearly with a low crude price plus the kind of passenger growth that India would see would benefit aviation companies, especially the likes of Indigo, according to Motilal Oswal.
That's right. The best consumption play, that is what they have mentioned as for Indigo stock too. But let's move on to another stock in focus. That was your Devyani International. The stock did surge in trade today after Kotak analyst upgraded the counter. The brokerage now has a buy rating on the stock from its earlier rating of add, and they have revised the target price to 190 per share from 175. Now, this particular target price implies an upside potential of 16% from today's highs too. Now, what is making the brokerage bullish is that they believe that the current financial year, the next FY26 is supposed to be better for Devyani due to pickup in same-store sales growth along with improvement in underlying demand. Improved execution is another positive trigger for the stock too. And the brokerage has also said that KFC, since it's quite under-penetrated in India, so the market opportunity is quite large given its strong brand equity as well. The company also has a strong record for creating shareholder value through organic and inorganic initiatives, and that's what they have highlighted in their note 2, which came out earlier today. Yatin, earlier even Bernstein had shared quite a positive outlook for QSR stocks this year, given that the quick fulfillment nature expenditure of consumers is on an upswing at this point of time. So looks like this is where investors can ride their volatility.
Absolutely, and Kotak is known for the quick commerce reports and the quick service restaurant reports. Both segments have seen a good disproportionate growth in India, and with Devyani leading that KFC brand, all throughout India, which is expected to remain underpenetrated for quite some time, would scale up growth. Not only that, apart from KFC, other brands also can be introduced by Devyani according to the Kotak report, which could drive overall footfalls and growth for them. So, good so far, and I think their inorganic plans are also quite aggressive. They keep acquiring a lot of businesses locally as well as globally, which clearly helps them drive the growth factor. Obviously, the results haven't been so far that great. But I think a gradual improvement in sales volumes and the habits of the people would probably benefit the company over the long term.
That's right. All right, we did start the week on a fresh note then. We'll watch out if this rally is sustainable in in this holiday truncated week also. In the couple of minutes, we'll also have retail inflation data, which is trickling in for the March. The poll estimates does suggest that the inflation is expected to stay below RBI's 4% tolerance band. We did have WPI inflation, which was also at 4-month low. So we'll watch out how the markets take it tomorrow. But with that, we've come to an end of this edition of Closing Bell. It is a wrap from Yatin and me. Thank you for watching.